Fireside Chat with Matt
And there is a
and Jennifer.
Well, hello, Jen.
Thank you.
How are you?
I'm doing all right. I like that our fireside chat has a true fire pit.
In 90-degree weather, no problem.
Exactly.
I'm glad you're here. And when I rolled up my sleeves about 7 years ago, and I thought about the industry looked a lot different than it does now. Actually, I was kind of horrified, to be honest with you. And, you know, a lot of people thought, Matt, what are you doing? You worked on Wall Street, you had all this great experience. But I knew the day would come when folks like you would be here. And thank you for being here. Because there's, you know, a lot of work has been done over the last few years. I wanted to just sort of first ask you about branding. Over the past few years, you know, you've developed a brand. There are a lot of inherent challenges. You develop a brand in a federally illegal business. So what's your secret sauce for that? I know that recently you've announced there's an entry into Arizona with Origin Extracts. You have that product, that brand in Massachusetts.
It's one of our key national brands, actually. And taking a step back to kind of answer your question, like what's unique and what's different about cannabis and branding? Well, there's a lot that's different. There's a lot that's difficult. But with cannabis, the key to branding, in our view, is that everything starts with the plant. Everything starts with the quality of the product that you put into your box. It's not how pretty your box is. I mean, we all want pretty boxes. But the most important thing is the quality of what's inside the box. And that's why, as a business, we are uniquely committed to being the largest high-quality producer of flower at scale across the country. Because that is the bedrock and foundation of what is going to build the strength of our business, the strength of our brands, and the strength of our company.
Sure. And, you know, as more states legalize, you know, we're still operating under the confines of closed economies. Every state has their own rules, regulations, testing protocols, and so forth. So how do you ensure consistency in your product?
It's a great question, and it's probably the thing that we spend, probably one of the top 3 things that we spend our time thinking about. The way that we have approached it is part of being the largest scale producer of high quality flower in the US is collecting the best cultivators in the US. Collecting a team of cultivators across our footprint of 8 states where we have excellent cultivation talent within each state, and we have excellent cultivation talent that sits even higher up in the organization that can help push the quality of the flower that we grow. The investment that we make in our team is incredibly important. The investment in that cultivation team and the standard operating procedures that are associated with it, they are really, really the cornerstone of our business. And it's a different way that we approach, I think, being a top tier premier MSO than maybe some others. For us, it's all about the plant.
Yeah, and I know you're going pretty deep in Florida, right? You're expanding there, your corporate headquarters will be there. And when we think about, you know, cultivation, a lot of people think, well, California is a mecca. But California, you know, is an attractive opportunity. It's been legal for many years, but not regulated. So there hasn't been adult supervision there since, I don't know, for 20 years. So it's a big mess. How do you think about, are you just on the sidelines until things, you know, sort of get back?
Well, I mean, California is such a big market, you can't ignore it. You have to pay attention to what's going on in California. You have to constantly be looking at opportunities there. I mean, you're right, between the illicit market and the fragmented nature of regulation in the state, it's really challenging. But it's the 5th largest GDP in the world, and it's the biggest market for cannabis in the US. So we would be doing our shareholders a disservice if we weren't consistently looking at opportunities there. What we do as a business when we are looking to add to our footprint and our team, our family, we're looking for the right asset with the right people, the right team, at the right price. And when we find that combination, in California that will also give us the ability to scale, because it's also super important to us to have a meaningful presence in every state where we operate. When we can get that meaningful scale, right asset, right people, right price, then we'll be ready to move to California. Not move to California, but move into California. I'm just moving to Florida, not to California.
Well, that's a really big challenge. I don't think people realize the fact that you have to do everything in each state. And so as more states legalize, you have to make that decision. Okay, as we get closer to the end zone in terms of federal legalization, does it make sense to deploy capital? I don't know. I don't want to pick on, Idaho, wherever. I don't know. Sorry if anybody's here from Idaho. How do you think about that?
Well, we do think that there is some kind of, 80-20 type rule. We do think you can get the majority of the consumer share in the U.S. by being in maybe 12 plus or minus states. Right now we're in 8, so you should expect us to continue to want to expand our footprint. But do we think you have to be in every single state? No, because this is an incredibly difficult business. I think Jason Wild mentioned it in the closing of the first panel today. This is hard. It's really hard, and you're doing it uniquely in every state where you operate. So you can't spread yourself too thin. You have to be very, very disciplined, very, very focused, and looking at those states that are really going to move the needle. So that's the way we think about it, moving the needle.
And it makes me think that, interstate commerce, some people argue that it's not going to happen because every state that's already, invested, they're not going to allow it. But if you think about it, there are going to be certain states that will be unserved because it's going to come down to business. Where do you want to, deploy your capital?
Well, I think you will have variability from state to state. Certainly for us, when we think about deploying capital in the places where we're going to deploy capital, whether it's buying a company or building out capital projects, we're really focused on, what's the time to return that capital? What's the risk to return that capital? And we're really lucky because if you're a good operator in cannabis, you have a really robust margin structure that allows you to have really fast return on capital, 18 months. You build a cultivation facility, 18 months later, you've got your cash on cash returned, which is incredible. And it means that we can be a little bit more comfortable with the timing and pace of, at some point, interstate commerce, because of course it's coming. Is it coming 5 years, 10 years, 15 years? Who knows? But when my capital is paid back in a year and a half, it helps me sleep easier at night.
We all need sleep working in this business, let me tell you.
CBN.
Yes, right. Well, talking about margins and, cash flow, what I find really compelling about the Air story is the financial discipline and the ability to generate free cash flow in light of the added cost of prohibition. For those that don't know, prohibition costs would include an exorbitant tax structure, roughly 60% for some. You have added compliance costs and so forth. So when federal prohibition ends, you don't have those costs. So the free cash flow profile will go, accelerate dramatically.
I mean, listen, the free cash flow without additional costs, without additional regulatory burden, it will definitely become a little bit easier to run this business, which will mean that our margin structure will improve. But I actually think kind of the bigger thing that is such a huge tailwind to this industry is the fact that, well, first of all, compare this industry to other industries that might be similar. Who else is growing at 100% top line year over year for quarter after quarter after quarter after quarter? Well, those companies are generally burning cash. Our industry is, at least for us and many other people now, cash flow positive. And people who have margin structures like ours, let's call it mid-30s in CPG land, those guys are growing at 2 to 5%. We are uniquely positioned in cannabis to be growing top line over 100% year over year and have mature CPG margins at the same time. It doesn't happen that often.
It does.
And it's an incredible opportunity. And one more, great opportunity. The other thing is, No one can buy it. So the people who can buy it are here. It's hedge funds, it's family offices, it's high net worth individuals. No 401k, no 40 Act fund. There is a wall of money that will come into this industry. And that, more importantly than the change in margin structure that comes from the release or relief of federal prohibition, is the multiple impact, the increase in prices that will come from all of the people who cannot buy today coming into the market. CPG trades at 20 times EBITDA right now. Your average cannabis company, that's a good one, trades about 10. And just plugging us, we trade at a larger discount because we were born as a SPAC. But that will change over time.
It's unbelievable how cheap these stocks are. And you just announced a buyback, so that's a big signal that, in your mind, in management's mind.
And that's right, because this business is so cash flow positive, it just gives us one other wonderful thing to invest in. We can invest in M&A, great return on capital. We can invest in capital projects, excellent return. We can build brands, and now we can also repurchase our own stock if we think that is the best use of our capital at that moment.
Well, could I just say something about M&A? Please acquire more companies. There are too many conference calls. There's too many earnings. I can't keep track of them. It's too hard.
Yeah, it's a fragmented industry.
So could you talk about your recent acquisition of the beverage category? I'm really excited about it. I've not tried. Have you?
Who has tried Levia out here? Oh my gosh, this is a lot of hands up. This is great. This is great. I'm very excited about that. Well, for those of you who haven't tried the product, the minute you try it, you will understand why we acquired it. It tastes like a LaCroix. It doesn't taste like a spiked seltzer. It's not sweet. It's 0 calories, extremely refreshing, fast onset. So within 15 minutes, you know how you're going to feel. You don't have to wait 2 hours and then, oh, do I have another 10 milligram edible or do I not? What's going to happen to me? You have, at least for us, in our current format, 5 milligrams in a can. You take a few sips. You wait 15 minutes. You decide if you want to take another sip or not. It is perfect for people who are not that familiar with the category, who are not that familiar with cannabis, who might be a little bit shy and are very comfortable with the beverage form factor. And it tastes great, and it's sessionable, and it's all of the things that are in line with the way people want to consume today. So we're super excited about it, and we really think it is for the cannabis consumer of tomorrow.
Awesome. I'm really looking forward to trying it.
I'm excited.
So, now when a new market is, when a recreational market enters an existing medical market, pretty much it cannibalizes the existing medical market because people don't have a need to get a card. We've seen patient counts go down. And I just wonder when that shift happens, is that confusing to the consumer? Because all of a sudden you're using, whatever product for medical purposes. Now, how do you convert that person to recreational use?
So I think that in states where cannabis is recreationally legal, just because someone doesn't buy it with their medical card doesn't mean they aren't using it for wellness purposes. A lot of people in recreational states are using cannabis for the same reason they did when it was medical only, which is pain relief, sleep aid, anxiety. And these are things that they've substituted cannabis for because before they were using other pharmaceuticals where they may not like the other impacts that they have. But I would say that it's a little bit of a fallacy to think that just because someone isn't buying with a medical card doesn't mean they aren't using this for wellness purposes. And I think one of the things we're most excited about as I think we announced in our earnings call a couple weeks ago that we'll be introducing a rebrand of Air Wellness to the community over the next couple of months through the rest of this year. And really, we believe that we sit at the intersection of wellness and wonder. We don't feel like those are mutually exclusive, and our new corporate branding will really reflect that intersection of wellness and wonder much more. And so we're really excited about it.
Great. Then, in terms of shifting back to M&A, what's really, what do you find most attractive? What is what you would, want to keep your eye on? Not a specific name, but the profile.
It's funny, but people ask us this question a lot, and We love keeping our options open. We don't think just saying this one type of thing is what's for us. We like to have lots of tools in our toolkit, lots of arrows in our quiver, because we think being open to either buying up, legging into a vertical integration trade in Illinois by starting with dispensaries and adding cultivation, or doing it the opposite way in Ohio, or cobbling all of them together in Nevada to create vertical integration. We think, or just buying a company that is vertically integrated, which is what we did in Massachusetts and what we did in New Jersey and what we did in Pennsylvania. We think being willing to look at all of those different opportunities to build our business will provide the best value to our shareholders long term. And like I said, we're looking for great assets, but with the right people, because people are key in this business. And getting the right people on your team just has a multiplying synergistic effect. Yeah. So that's super important. So we can't be just one size fits all in terms of our M&A program.
You know what's also interesting to look forward to? They're offering cannabis cultivation classes in universities now. So we could look to a bright future for
Absolutely, I'm super excited for that. We're really excited to partner with a lot of these educational institutions. We've done work with Cornell in the past. We've done work with New Jersey's in the past. We're excited about extending that as the opportunities extend. Definitely in Florida for sure.
That's great. Well, I think we're.
Are we getting the hook?
No hook.
Oh.
No pressure.
Okay, no problem. Let's see. There's been a lot of volatility. I guess listening to all the conference calls, it's very difficult when you listen to all the MSOs speak, because there's a lot of volatility in terms of margin expansion or margin compression, because one firm might be doing an acquisition that's integrating, and then the other one won't be doing the same acquisition at the same time, integration. How are you able to successfully manage street expectations around that?
Well, I think that the most important thing for investors to remember, and for us to try to kind of remind people of, is where this industry is going long term. First of all, as we talked about earlier, no industry grows at 100% year over year for for quarter after quarter after quarter at a CPG like margin structure. That's incredible. So reminding people that if it's up 400 basis points one quarter and down 200 basis points the next, keep your eye on the big picture. You've got tech-like growth with CPG-like margins. It's an incredible opportunity. So I think that's the first point. And I think the second point is you really just have to make sure that you kind of, as an operator and as an investor, you just don't get caught up too much in the noise. You have to look and make sure that people are really doing their job as premier operators, best in class,